Every year, the tax code changes, and right now is the best time to learn exactly how you can get ahead of those changes by setting yourself up for success in 2026. That way, you can pay as little tax as possible this year. So, in today's video, I'm going to show you the three best practices that you need to be aware of going into 2026 so that you can pay as little tax as possible. But what are they? Step one, you want to know what your business profit is. Step number two, after you know that, you want to calculate what your taxes are in the middle of the year. And number three, once you know what your taxes are, you want to make a plan to lower your taxes. Now, this is exactly what I'm implementing for all of our tax planning clients to make sure they pay as little tax as possible. Now, if you want to skip ahead and have us install these best practices into your business, click the link in the description of this video, apply to work with us, and we'll talk to you then. Without further ado, let's jump into today's video. Now, one of the things that I want to clear up, one of the biggest misconceptions that I see it, I used to believe it, I know my parents did, and I bet a lot of you and your friends do, is that a lot of people think that taxes is just this hocus pocus magic, that there's just a bunch of accountants in the back looking through tax law and just we're going crazy, pulling out our hair, looking for all the stops. But that actually couldn't be further from the truth. And I'm going to show you guys here. This is a copy of a tax return. Obviously, it's blank because nobody's done anything yet. But I kind of want to show you guys with my handy dandy pen that this really just is a math equation for the most part. As you guys can see, you'll see a lot of forms and terms that you're familiar with. W-2, so you just put all of your W-2 income here. You have things like interest, dividends, IRA distributions, capital gains from the stock market. This line 8, that is all the business profits that you have, and a little bit of other income. And as you see here, in this line here, if you add up lines 1, 2, 3, 5, 6, 7, your total income is here, and you get your total adjusted gross income. And voila, if we slide to this other one, you get here to your adjusted gross income, or what's called your AGI. You then have a box here that'll tell you, based on all of your income, what your tax is. And it really just is a math equation. Now, don't get me wrong, there is a little bit of the hocus pocus about knowing where to pull some levers, but for the most part, your taxes are based on a math equation. How much income you made this year and how you can lower it. It really just is a math equation. There isn't some hocus pocus back there. I wish there was, believe me, there's not. Now that we understand this, that taxes are a math equation, in my opinion, we get into step one. You have to know what your business profit is first, or our profit first. Most of us that are watching this, we have what is called a pass-through entity. I have that. My tax business is what's called a pass-through entity. Now, that is a fancy way of saying that if you own a business, you pay the taxes personally on all your business profits. The business does not pay any federal income tax. The people who own it do. And that's why we have to know. So we have to know if we're taxed on what our profit is, we better know that. Now, when I meet with a client, I ask them for two things, or a prospect, I ask them for two things before I ever meet with them. I will not meet with you if you do not send me this stuff because, as the analogy I'm about to make, you guys will understand that. I need to see a copy of your last personal and business tax returns, and I need an invitation to QuickBooks or whatever your accounting ledger is. Again, there's Digits, there's Zoho, there's all kinds, but I need an invitation to your books because I have to see where you started last year's tax returns, and I have to see where you are this year, i.e. QuickBooks. Now, the analogy that I like to make, why I need to know that, because some people might ask, well, why do you need to know all the information if we're just meeting with you? Most people want an accountant or CPA that's going to take a measured approach based off of a math equation. Well, I like to use the analogy of picking kids up from school. We've all done it. I know I used to call my mom after my baseball practice was done or my basketball practice, and I would say, Mom, I'm done with practice. Can you come pick me up? The first thing that she would inevitably say is, where are you? And I would say, I'm in the front of the gym. I'm in the back. Okay, wait there. I'll be there in 20 minutes. However, I'm sure you guys have all done this, where you go to pick up your kids and the first thing they say is, where are you? And you say, or they say, I don't know. And then you look like this. Ugh. What do you mean you don't know? It's the same thing with your taxes, right? We have to know what your profit is, but we have to know where you are. And that's why people like working with us because we take a measured approach. If you don't know your profit, you're not going to know your taxes, and you're going to be in a whole world of hurt. Now that we know what our profit is, we have to calculate what your taxes are in the middle of the year. And you might think, in the middle of the year, how do I do that? What do you mean in the middle of the year? Well, it's actually quite simple, right? How we calculate that. And again, you could obviously use a spreadsheet or a 10 key like that, but I like to take a little bit more of a measured approach. Now that in theory I know what your last tax return was, I know what documents to ask for. You basically take your QuickBooks reports. It's what's called a profit and loss, and a balance sheet too. You add up all of your payments, or all of your pay stubs that you have, your wife's pay stub, your pay stub, any investment income, and you add it up. And again, this really just is a math equation. It actually is quite simple. Now, I want to show you guys how taxes work at a high level. Again, this is not meant to tell you to go out and be like, oh, now I know how to do my taxes because I've seen this Word doc. It is more just an analogy. And I will tell you this, I learned this in one of my tax classes. Once you see this, you cannot unsee it, and it will forever change the way that you look at taxes. So now again, in the middle of the year, you project out and you think my taxable income is going to be $100,000, which is cool. You look at your tax rate, and again, it's roughly 20%. We're not here to get into a tax bracket battle, but this is just the idea of it. So if you're in the 20% bracket, that means you would owe $20,000. Now, what a lot of people have a misconception is, all right, I owe 20,000. I'm going to go buy a car or buy something business related for $20,000. And you think, voila, 20,000 to the IRS. I'd rather buy a car for 20,000. Like Lee Corso said, not so fast, my friend. Now, that's sort of right. It does lower your taxes, but it doesn't eliminate them. So instead, right, our taxable income was 100,000. We went out and spent 20. Now our taxable income is 80,000. If we're still in the 20% tax bracket, that means the taxes that we owed are 16,000. So we spent 20,000 to save 4. Now again, we don't need to get into a tax bracket battle because it might drop you down, but the point is that it's really just a discount on these. And I like to tell all of our clients that do not let the tax tail wag the dog. And again, this is what a professional tax projection looks like. Now again, I always say calculate your taxes with a professional. This is what a professional one looks like. We would take all of your income, your business income, your W-2s, all of that. We would input it into our software, and we would come out with a number. We would say, oh, you're going to owe 44,000, or you might owe 23,000. Again, you want to get these professionally done. This is what it looks like. We use a software called CFS. Some are going to look like this, some are going to look different, but you want to get it professionally done in the middle of the year, like this person. Now that we know those, we can get on to step number 3, which is make a plan to lower your taxes. Because we've already gone through the fundamental stuff. We calculated our profit, we calculated our tax, and now that we know these, now we can make a plan to lower your tax. Now, I want to go back up to this Steve Carell picture here to show me what grinds my gears. Is a lot of times, and I know accountants, that they will charge $10, $15, $20,000 for a tax plan, which is justified. Sometimes it does cost that much. But a lot of times, they don't ask the client or the prospect for any documents, what they make. They just say, we can save you all these taxes. And I always look at them. I look like Steve Carell. I think, like that is so misleading and incredibly inaccurate because maybe they don't owe that much in taxes. For example, if you only owe $2,000 in taxes, I would probably tell you just pay it because it's going to cost you more to go out and spend $10,000 lower too. Doesn't really make sense. So let's get back to number 3 here. You want to make, now that we know these, you want to make a plan to lower your taxes. Now, this is the same example as before. This particular client, we'll call him James. He came to us in August of 24. Again, this is a real one. August of 24. And it was the first year that he'd ever earned a lot of money. And he knew that, well, this is the first year I've ever earned a lot of money in my business, and I know I'm going to pay taxes, but I don't really know what I'm about to pay. Because I think he had always paid like $1,000 every year in taxes because he didn't make very much. And obviously, I looked at him and I said, James, that makes sense. The only real way to know what you're going to owe in taxes is we have to actually do your tax return. And I asked him, would you rather me just kind of guess or would you rather me give you an actual number? And he said, oh, I'd rather have an actual number. So we did that. And now, once we knew, and again, he went to a professional bookkeeper. So he had an actual bookkeeper that did his QuickBooks account. He gave us access to last year's return. He gave us all of his pay stubs. So we knew without a shadow of a doubt, this is what he made. And we were able to make a plan from this. Now, this particular person, if he had just kept going and just kept making money the way he was going, he was going to owe $44,000 in taxes. However, after calculating it a second time, we said, James, if you do these few things, and we'll go over those in a minute, you can go from owing $44,000 to $23,000. And we knew that without a shadow of a doubt because we were working with what I would call solid numbers. We knew his QuickBooks account, or we had access to his QuickBooks account to pull what's called his profit and loss statement. We were able to look at his pay stubs. We looked at his last return. We knew everything, and I knew without a shadow of a doubt that's what he would owe. And once we knew what his taxes were, we were able to give him what to do. We converted his LLC, or converted, we elected for his LLC to be taxed as an S Corp. We had him buy a new truck that he already needed. He opened a simple IRA, which he chose to do. Not the best retirement account, but that's what his advisor advised, so went with it. And then we told him that if he hired his 12-year-old son, that would be part of it. And again, this was all part of the savings. Now, the reason why I felt comfortable giving him this plan was that we knew his numbers. We knew exactly what it was. Now, this brings me back to my next one. Again, that was a fundamental plan. That is not flashy. We didn't have him go out and do crazy stuff, and he was able to save $23,000. Now, again, this is a fundamental plan. This is very fundamental. This is one of I don't know if he's my favorite player, but he's a very good player. His name is Joe Mauer. He's a Hall of Famer. I don't think he should be a Hall of Famer, but neither here nor there. He's in the Hall of Fame. He had an amazing career. He had 2,000 hits. He was what I would call a very fundamental player. He wasn't flashy. He's not Shohei Ohtani. He's not Barry Bonds. He's not Babe Ruth. But he was an amazing player. And I would pick him in a draft I would take his career 1,000 times over because he was amazing. And it's the same thing here. This approach that we talk about, this 3-step approach, it is a fundamental plan. These are very fundamental things, but these can help you save, in the case of James, $23,000. And again, it's not sexy. We're not going out and buying rental properties. We're not buying Ferraris. We're not buying crazy stuff. But I can tell you in James's case, he was very happy because he went from owing $44,000 to $23,000. And again, this is a fundamental plan. And again, we use this with all of our tax planning clients. We use this exact same process. We want to know what their profit is, we calculate their taxes, and then we give them advice. This is very fundamental. And if this is something that you want, a fundamental tax plan, make sure that you reach out to us. Click the link in the description of this video, apply to work with us, and let's see if we can get you on the straight and narrow. My name is JT, and I will see you on the next video.